Hello and welcome. I'm Anna Wells, the Executive Editor of Industrial Distribution. Today I'll be joined in the studio by ID's Managing Editor Mike Hockett, along with a great group of expert contributors. And we'll be walking you through the list of the top 50 industrial distributors based on their reported revenue for fiscal year 2020. As we examine the 2020 fiscal revenue numbers of these companies, we'll review the market as it was in 2020, as well as add some context with what we're seeing today. For many, that means a lot of widespread economic and supply chain drama, the difficulties of which levied their greatest impact on our top companies' sales numbers. It will be a wild ride. We also want to acknowledge that there are a handful of companies who elect not to share their industrial revenue numbers year over year, and those companies, McMaster-Carr and SunSource, for example, have been left off the list. We also had a few Big 50 list regulars who wished to stay out of the limelight after the tumultuous 2020 derailed business conditions and, with it, their sales results. It's evident right off the bat how impactful the economic conditions of 2020 were on industrial distributors. For example, it took $132 million in annual sales to make our list last year. This year, our number 50 company slid in with much less, $118 million. That company is Banner Industries, the Danvers, Massachusetts-based distributor of flow components who gains entry to the Big 50 for the first time. Our number 49 company, San Jose's Valen Corporation, is back on the Big 50 after narrowly missing last year. At $122 million in sales, Valen called 2020, quote, an exceptional year, adding that the growth seen in its semiconductor and medical device industries generated organic growth that more than offset the COVID impact of its other business units. The company's sales were up overall nearly 12% over the previous year. Big 50 company number 48, Cummins Wagner, comes in at $129 million and spent 2020 boosting its footprint in the Northeast, including adding a new facility in Albany and actively looking to upgrade other branches. At 47, we see distributor of hose and hose accessory products, JGB. Longtime president Bob Zawicki retired this year and was replaced by former Erick's executive Kevin Kilkelly. This past July, JGB announced the acquisition of Industrial Petroleum and Mining Supplies Limited, which does business as Hosepower Canada and is based outside of Toronto. JGB took a sizable hit to its sales this year, and so did our next entrant, IBT Industrial Solutions. Here's Mike Hockett with more on IBT.
IBT Industrial Solutions was featured in our July-August issue in an ID in-depth profile and a 5 Minutes with ID episode, both of which you should check out if you haven't yet. Moving down one spot on our list from 2020, IBT focuses on the industries of food and beverage processing, aggregate and mining, aerospace, ethanol, and grain. IBT has recently gone all in on its digital offerings in the form of its new Stratus Learning training initiative, which provides numerous online courses in a variety of power transmission topics in a flexible learning format. IBT's new Uptime app also provides a valuable resource for manufacturing customers in minimizing downtime by helping them fix costly breakdown issues as soon as possible.
Our number 45 company is Flint, Michigan-based Shively Brothers. In the context of 2020, Shively's essentially flat sales figure of $141 million was enough to bump this supplier up 2 spots on our list. Shively says it's been exploring diversity within its customer base, using e-commerce to venture into other verticals outside of its core automotive manufacturing base. At number 44 is Eastern Industrial Supplies, another newcomer to the list with $141 million in sales, notably edging out Shively by just $250,000. EIS specializes in PVF and commercial plumbing products distribution. It first opened its doors in 1980 in Greenville, South Carolina, and now serves the greater southeastern U.S. EIS is a member of AD and owner member of SupplyForce. Our number 43 company earns the top Leapfrogger Award, and that's Martin Supply. After COVID-related sales sent the company's revenues up in 2020 by nearly 8% year over year, Martin jumped a full 7 spots. Martin says that March 2020 was the company's highest sales month in its then 86-year history, and that its 2020 e-commerce sales nearly doubled that of 2019. In early September of this year, Martin made his 4th acquisition in a 2-year span. At 42, we see the company with the largest year-over-year sales increase for our entire list, and that's Mallory Safety and Supply. With a 17% jump, Mallory moves 4 spots. The company expanded significantly in 2020 through the acquisition of Wise Safety, a $50 million revenue distributor that gained Mallory 9 locations. With this, Mallory CEO Tim Loy told ID that they expect revenues to top $200 million for 2021. At 41, we see Hydradyne, which slid 3 spots from a year ago after its 2020 sales had a significant drop-off. Providing fluid power sales, service, and fabrication since 1968, the company says it's the largest Parker distributor in North America. Sales drop-offs like we've seen so far on the countdown were all too common in 2020, as distributors battled through some of the most extreme market conditions we've seen in decades. Some specific to the pandemic and others that were pre-existing. For more on this, former ID editor and the founder of the Big 50 list, Jack Keogh.
The one word that I can think of that describes distributors' reaction to everything is resilience. Back in the 1980s, when mergers and acquisitions and all these extreme conditions were continuing in our sector, there was faced so many challenges, including blanket orders, systems contracts, integrated supply, and then, of course, increased competition, national chains emerging as distributors bought up other distributors and expanded the geographical and product reach. So those things were all happening to distributors and they reacted accordingly. I can tell you at least on 5 occasions that experts told me that this was the end of distribution for one reason or another. For example, the internet. When the internet really came into its being, people said, everyone's going to be buying products from over the internet. Purchasing people won't see a need to meet with outside salespeople. All these things took place, but yet they adapted. These distributors showed that they could deal with all the things happening within the marketplace as well as with the economy. We're talking recessions, we're talking about national chains, etc. But I don't think anything's hit distribution as much as the pandemic. This pandemic really, not just obviously the distribution, but our whole economy just ripped it apart. We saw many distributors with sales dropping 20 to 25%. That's unheard of. And now we're taking a look at all the other factors that have influenced distribution. For example, remember when Amazon Business was founded, it was growing so fast. Well, this year it hit $25 billion in sales. That's a remarkable number. And yet distributors keep at it every day. We've got HD Home Depot, we've got Lowe's, and even Ace Hardware, which is emerging as competitors to construction distributors, electrical distributors, and frankly, industrial distributors. But resiliency is the key to success. And distributors have found that success by being resilient, but also adapting. And that's what you're going to see in the future.
And rounding out the bottom 10 is Bridgestone Hose Power, a company we'll hear more about from Mike Hockett. Mike?
Bridgestone Hose Power, a wholly owned subsidiary of Tokyo-based Bridgestone Corp., first charted on the Big 50 in 2015 at number 49, and it remains safely on our list, repeating last year's ranking of number 40, despite a considerable sales decline to $176 million. CEO J. Palmer Clarkson told ID that the COVID-led major drop in oil activity gave the company its first annual revenue decline since 2008, but he expects 2021 to be a complete reversal as the Orange Park, Florida-based company resumes its climb toward its goal of $400 million in annual sales.
Our number 39 distributor is CBT Company with $215 million in sales. CBT gained 2 spots, propelled by a 5.4% sales increase over 2019. CBT celebrates 100 years in business this year and says material handling will continue to be a very active segment for the company going forward. At number 38, we have Bossard North America, who, despite flat sales, gained a spot over last year. Into 2021, the company has seen some marked increases in revenue, with Bossard's 2021 first half sales in the Americas up more than 20%. The number 37 company on this year's list is TenCarva, whose 2020 sales fell about 5%, but the company maintains its ranking from last year. Serving the Southeast U.S., TenCarva has served as a provider of integrated and municipal process equipment solutions since 1978. The company tells ID that its top investment areas heading into 2022 are in ERP upgrades and related digital infrastructure, while additional staffing and product line expansion are also part of its strategic goals. The biggest news out of number 36 company DGI Supply in 2020 was its acquisition of certain assets from Rockford, Illinois-based Production Tool and Supply, located in the Chicago suburb of Wheeling. DGI has since combined its inventory in Loves Park, Illinois, with PT&S's Rockford location, that is 9 miles south. At $266 million in sales, DGI dropped 7.6% over the year prior. DGI Supply happens to be one of the 16 companies on our list that are members of the Affiliated Distributors Organization, a member-owned group that provides valuable advantages to independent distributors. We recently spoke to Mike Carr, the president of AD's U.S. Industrial and Safety Divisions, on what this means to the organization.
First, a big congratulations to the 16 AD distributors that represent 1/3 of the industrial distribution Big 50. And we're happy to say it's not a coincidence. Our members are engaged in networks with progressive and innovative peers. And the learning that they get from these engagements, from these networks, really make them better. When we look at AD, you know AD is member-owned and governed, and together we continuously make AD better. Our members have a vested interest in making AD better and continuing on the journey that we're on. And we've implemented transparency in reporting and rebates. And while that sounds simple, it really allows our members to make strategic decisions to maximize on growth and rebates. And they did that a lot last year, and they'll continue to do that because the information is really priceless. You surround that with programs like e-commerce and HR services and procurement services, just to name a few. Our members rise to the top. AD helps them fix their pain points, and fixing those pain points allows them to move on to growth and to opportunities where they can really serve their customers better.
Our number 35 company, who happens to also be an AD member, is Turtle & Hughes, a New Jersey-based independent who disclosed its revenue number to us for ranking purposes, but did not wish to make it public. Turtle & Hughes acknowledged that the pandemic and supply chain disruptions have been significant. But even so, the company is, quote, always open for the right strategic acquisition, and said it has reviewed several in recent months. Our number 34 entry on the Big 50 list is Hisco. With more on this Houston-based company is Mike Hockett.
Houston-based Hisco's 2020 sales fell about 8% to $300 million, but with so many distributors in the same boat, the company moved down only one spot on our list from last year. Hisco said it leaped into the PPE space in 2020 and did very well there, and still is, having expanded its private label offering to support demand. Still, challenges in key market segments, including aerospace and ongoing supply chain issues, are impacting almost every Hisco market segment. Hisco has received numerous awards in recent years for its website and e-commerce offerings.
At number 33, we find industry regular Kimball Midwest. And while the company's sales were up less than 1% in 2020, it was enough to move the family-owned company up 2 spots from a year ago. In October of 2020, Kimball relocated its Dallas area distribution center to a new, larger facility there, and it announced this past July that it will open another, the company's 5th overall, early next year in Newtown, Connecticut. Our number 32 company is Chicago-based Lawson Products, with $352 million in sales. Lawson's 2020 sales were down 5% from a year earlier, but a big acquisition in the form of Irving, Texas-based PartsMaster is already paying off. In Q1 of this year, Lawson topped $100 million in quarterly sales for the first time ever, and it improved further on that in Q2. This year's number 31 company is Border States, and Mike Hockett has more on this Fargo, North Dakota-based distributor.
Primarily known as an electrical supplies distributor, Border States' industrial sales are formidable in their own right, which is why we began including the company on our list in 2017. Those industrial sales took a heavy hit in 2020, and Border States moves down 4 spots on our list at $355 million in sales last year. Border States has recently built a project management site that will boost visibility for its employee owners and customers with consistent, up-to-date project status. The company is also transitioning to the newest version of SAP for its ERP system.
And with that, we'll wrap up part 1 of this year's Big 50 List Countdown. A special thank you to our platinum sponsor, Epicor Software. Be sure to join us tomorrow when we walk through numbers 30 through 11 on this year's list, and a big congratulations to all of the companies we've named thus far. Thanks for joining us.